Hello, everyone. Welcome. This is Ty Kiesel from NAV. I'm glad to be here to talk with you today. We're going to spend a few minutes and talk about equipment financing. And believe it or not, this is a fairly flexible type of small business financing that a lot of small businesses can use and leverage to the benefit of their business. So let's define what it is first. It is either borrowing or leasing to purchase hard assets for your business, basically purchasing equipment. And, equipment has a pretty broad definition in the context of small businesses. It could be anything from a big piece of construction equipment to the pizza oven in your Italian restaurant. So don't necessarily tune out just because you think equipment financing only applies to big construction equipment or manufacturing equipment, because it is a lot more than that. And I personally like equipment financing for a lot of different reasons, and we're going to talk about those today. So this is good if your business needs equipment, if your business needs working capital and has equipment, or if you're a startup and you're kind of considering what your financing options are, because this is one of those options that newer businesses are able to leverage to add borrowed capital to their business, which is one of the reasons why I really like it. So to start off with, let's look at equipment financing. You want to evaluate your business, evaluate the equipment that you have, evaluate equipment that maybe you want, or even equipment that you need. Determine if you don't have what you want right now, and it's something that can be categorized as equipment. And we're going to talk about what some of those things are in just a minute. But if you need equipment and you can justify purchasing it this way, this is a great way to leverage borrowed capital to build your business. But you need to run the numbers. Can the equipment that you want to purchase improve the bottom line of your business somehow? Does it increase production and productivity? Does it reduce the cost of goods sold? Does it improve processes? Does it create additional profit opportunities? I grew up in a family business, and my father thought there were basically two reasons that you borrowed. One was to improve the ROI of a particular project, and equipment can do that. And the other was to improve the value of your business overall, and equipment can do that as well, because it becomes an asset. And so kind of run the numbers, see if there is a particular piece of equipment that will make your business more efficient and potentially generate more income. And then you have to research and apply. So what lenders in your area offer equipment financing? Banks and credit unions offer equipment financing. Often the dealerships where you would purchase the equipment would offer financing or leasing of some kind. And there are also online lenders that specialize in equipment financing. So if it looks like you're going to be able to generate additional revenue or additional profits with a piece of equipment, you can start looking to see where to get that equipment and can apply and finance the equipment that's going to work for you. So common things that are considered equipment: obviously heavy equipment, farm vehicles and equipment, construction equipment. These are all things that have been traditionally associated with equipment. Manufacturing equipment is also associated as equipment, as are restaurant appliances and equipment, the tables in your restaurant, the chairs in your restaurant. All of those things can be, all those things could be considered equipment. Vehicles, trailers, food trucks, etc., computers, and the point of sale system that you have in your business to manage sales, that could be considered equipment, as well as like I mentioned before, furniture. So I don't normally do this in these things, but just to give you an idea of how you can leverage equipment financing, let's talk about a couple of NAV customers in a broad context. This particular customer was renting 2 trucks and wanted to get a third, but renting the trucks was becoming really expensive. He was having trouble qualifying for financing because his business was still fairly new and he didn't have a very well-established business credit profile. NAV was able to get him approved for the truck that he wanted, and he was able to save about $1,500 every month over the cost of renting. And that truck enabled him to generate the additional $20,000 per month in revenue that he thought it would, and the financing will help him actually build his business credit. One of the reasons why a newer business that doesn't have a very established business credit profile is able to get an equipment loan is because the equipment itself is leveraged as collateral for the loan. So it's a fully secured loan as far as the lender is concerned. Another example of a success story is a NAV customer that wanted to purchase a semi-truck to expand their business. He had 2 merchant cash advances that were making daily pulls from his business account, but he wasn't sure about taking a third merchant cash advance to buy a used truck. We were able to get him approved for an equipment loan, and he's saving thousands of dollars versus taking on another merchant cash advance. Typically, you should expect a lower interest rate on an equipment loan. It's going to be typically longer terms, particularly when you're comparing them to a cash advance type project. Equipment financing versus regular financing has some great advantages, but we should look and talk about some of those things. For one thing, it's more attainable. I mentioned earlier, because the equipment serves as collateral, the qualifications are generally less strict. You're not going to need as good a personal credit score, and you're not going to need as strong a business credit profile. So sometimes you can get an equipment loan when a more traditional feeling small business loan is not attainable. Now, equipment financing is not a catch-all type of financing. It's for a specific use case. You're generally buying equipment, and the loan is approved for a specific use, where some of the other types of financing that are available to you are more flexible. The thing I like about equipment financing and why I think it is a flexible way to borrow is because if you need equipment in your business, you can use an equipment financing to free up cash flow for other things. So instead of purchasing equipment with cash flow, you can use equipment financing and use that cash flow for other things that you can't borrow for. It's also a good financial vehicle for younger businesses. Since the requirements are less strict, these can be a good way for a newer business to borrow. But be aware they will often require a down payment that could be as much as 20%. So how do you get an equipment financing? Typically, lenders are looking for at least a year in business. They're looking for a personal credit score of 650 or better. And, a loan at the bank, for example, they're looking at a little higher than that and would prefer a credit score in the 700s. So you don't have to have impeccable credit to get equipment loan. Also, they're looking for annual revenues of 50,000 or more. Now, generally speaking, the better your personal credit score, the better your business history, and the more you have in annual revenues, the more likely you are to get the best interest rates and the best terms. So what we're talking about right now are the minimums, and they typically will be a little harder to get an equipment financing loan with these minimums. The better you can be, as far as your credit profile and your annual revenues are concerned, the more likely you are to get approved. You may still qualify, even if you're a little less than this, provided you have a significant down payment. And you should consider that, and it's going to vary depending upon the lender, of anywhere between 5 and 25% of the loan value. So, is equipment financing right for you? These are important questions to ask yourself. Number one, do you meet those basic requirements that we just talked about? The second question is, will an equipment purchase help your business or improve your bottom line? Now, I'm not one to say borrow just because you can. Make sure that when you borrow, it's going to impact your bottom line in a positive way, regardless of where you get the money and regardless of what the interest rates are. Borrowing has costs associated with it, so you want to make sure that this is going to help your business. And the last question is, will the payments be manageable? You want to make sure that you can make each and every periodic payment. Lenders really want the answer to a couple of important questions. Number one, can you make the periodic payments? They're going to want to know that you have the financial wherewithal, whether it be in cash flow or income, that you're going to be able to make each and every payment. And they're going to want to know, will you make each and every payment? And that's where your credit profile comes in. They're going to look at your history. They're trying to make a decision about what you will do in the future based upon what you have done in the past. And if you have a very poor credit profile, it makes it harder for them to assume that you're going to make those payments, and it could impact, even if they approve your loan, how much you pay in interest. So, is equipment financing right for you? You need to answer these questions, and you'll be able to determine that. So, where do you get started? If you go to nav.com, you can see what equipment financing options you currently have in your NAV account. You'll be able to understand your qualifications and maybe places where you need to improve. And, you're also going to be able to look at your credit profile so that before you go into a lender to borrow, you'll know what the lender is seeing when they look at you. And you're also going to be able to review financial matches in your NAV account as your business grows. We don't sell your information to anybody. So if we match you to a lender, it's because we think that's a good match for you and where you are right now. So I hope this has been helpful. Feel free, if you have questions that we didn't answer here, to reach out, and we will be happy to do that. And hopefully we can get you into the equipment financing that you're looking for. Thanks a lot, and good luck.